When it comes to your retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated just like a number. This is your retirement. So it's time to think differently. And you're in luck because you've found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic, run-of-the-mill plans containing the same old cookie-cutter solutions. Dave Chase and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hats and get ready to take back control of your retirement today and for all the tomorrows to come. ILG Financial's Retire Your Way podcast was created just for you, and it's starting right now.
Welcome to the Retire Your Way podcast with Dave Lopez of ILG Financial. When it comes to retirement, do you want to have the same old plan everybody else has? Of course not. You're unique and you have your own goals and dreams. Don't be treated just like a number. This is your retirement, so it's time to think differently. And you're in luck because you found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic run-of-the-mill plans containing the same old cookie-cutter solutions. Dave and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And Dave, my name is Ron Stutz, and I am happy to be with you again today. It is always a pleasure when we do this podcast.
It is. And, we were just joking about that before we started the podcast, how much I enjoy spending this time together with you and just talking about these different ideas together. So thanks for being a part of it. I sure appreciate you.
Well, I really enjoy it, and certainly you're the one who provides all the good information. But let me put your phone number out there for folks if they'd like to get in touch with you and have a conversation about their individual situation. It is 540-720-5656. 540-720-5656. That'll put you in touch with ILG Financial, and then you can talk about your individual scenario. On today's episode of Retire Your Way with ILG Financial, we have Dave here to discuss something many of us have experienced at some point in our lives, debt. Boy, that is an ugly word, isn't it? More specifically, what happens to those different types of debt that we may have accrued when we die? Dave, this is, it can be an unpleasant topic, I suppose.
It can, and I will tell you, it one that sneaks up on people, Ron. And I'll give you an example. In the last 2 weeks, we've had, unfortunately, 3 clients pass. And in every situation, Ron, there were things that they had done or not done before they had met with us. Right, that we're now trying to untangle because it's simple little things like changing beneficiaries or, making sure the money went to the right place at the right time, that just because they didn't take the time to do it right, it's created just a nightmare for the executors.
Yeah.
It's stuff, if they had been working with us on it, they'd have caught these, in these 3 situations. These are 3 clients who came to us, and their parents weren't the client. Does that make sense?
Right, yeah.
So if their parents had been our client, this would have been caught. But now our clients came to us and said, hey, my mom died and we're looking at this, and either the beneficiary wasn't correctly filled out or was left out altogether. And it's just created a hornet's nest. Today, we're going to talk about specifically one type of problem that has to be dealt with if someone passes. Mm-hmm. And as you said, that is what happens to the debt someone holds when they pass. So it's important to know that most debt, and I'll give you the one exception to that, really doesn't just disappear when you pass on, Ron. Right. There are different situations for different types of debt. And that's what we're going to spend today talking about, right? We're going to talk about different types of debt when we pass, kind of how does that work and what's the responsibility of the estate? What's the responsibility of maybe the children or the heirs or the spouses? Just to give everybody a good overview of things they should be asking themselves or their financial providers prior to them passing away. Right?
Well, you made one quick comment there that just jumped out at me. You said there's one type of debt that does not pass on to your heirs. I'm just wondering what that is.
All right, let's start with that one, right? So if you have federal student loans, they are the only type of debt that disappear when you pass away. So
Okay.
If they're not forgiven, right, depending on when you're listening to this podcast, some of it may not be forgiven with the new executive order that President Biden pushed, right? But specifically, if you still have federal student loans, you pass away, those are forgiven. There's another type, Ron. Have you ever heard of Parent Plus loans?
I don't think so.
Yeah, they're a type of student loans too. Parent Plus loans are also forgiven, and this is kind of nice, if either the parent who signed up for the loan or the child who benefited from the loan, if either one of those dies, the loan is forgiven.
Okay.
Okay. And then the third type you usually see whenever we're looking at student loans is then the third type is what we call private student loans. That's loans that from not the federal government, but from a third party, like a bank or someone else. They may or may not be discharged when you pass. It really kind of depends on the terms of the note, who the lender was. The lender may try to collect from the estate, which they have the right to do. Mm-hmm. If there's a cosigner on a student loan, right, for a private school loan, then the cosigner will be responsible for paying that back the loan, even if the person who took the loan out has passed.
So different rules for those private student loans, for sure.
Yeah, the goal today isn't to solve it. We can't do that for everybody listening, but just to make you aware, use this as a checklist and go through your stuff. And if you have any loans, you can kind of go through and decide if you need to be looking into this now.
Mm-hmm. Okay, well, you just talked about the one exception where, debt is not passed down. Let's take a look at the other types of debt out there and
Sure.
the types of rules that each one of those has to follow.
Yeah, you got it. So let's start with, how about tax debt?
Yeah, let's talk about taxes for sure.
Okay, tax debt, you're going to be sorry to say, does not disappear when you pass away. So if you haven't paid taxes that are due, your estate is liable for that taxes. So the executor of your estate, which could be the executor of the will, is usually what that's referred to. They're going to have to file a tax return for the final year that you were alive, even if you were only alive part of the year. And they're going to have to pay taxes on any income or any interest or dividends or retirement account income or Social Security payments, pension payments, any income during the year, just like a regular tax year, taxes have to be paid for that year.
Now, what if your estate doesn't have the money to cover the tax debt?
Yeah, great question. So if there isn't money in the estate to do it, the IRS can't collect from any heirs personally, which is great news, isn't it?
Yeah,
Right?
absolutely.
So what happens is that debt just gets discharged. Whenever you hear the word discharged, it's just a fancy way of saying that they write off the debt.
Gets forgiven.
So the heirs, the big takeaway is the heirs aren't responsible. So this is an example of a debt that in theory doesn't disappear when you die, but it's only the responsibility of the estate. If your estate can't cover the costs, the debt's not transferred to the heirs.
Okay, one that I'm worried about here, and this is a common concern for so many people. How about medical debts? What happens with those?
Yeah, that's a big one. So medical debt does not disappear when you pass away. And there's a couple exceptions. Of course, it depends on whoever the hospital or the medical entity is that the money's owed, right? If the debt is very small, the claimant, which is who you owe the money to, or who your family member owed the money to, the claimant will usually write the debt off because it takes more time and money to try to claim a small debt than it does just to write it off.
Yeah.
Okay. In most cases, though, the medical debt must be and will be claimed by your estate as a liability. So the estate, again, is responsible for settling up any outstanding medical debts. If there's not enough money in your estate to cover the medical bills, then the debt is written off. Just like the taxes, the heirs aren't responsible. But there's an exception to that, Ron.
Yeah.
That's assuming no one else is personally responsible for your medical treatment. Right.
Okay.
So an example would be God forbid, if a child passed, right, the parents are responsible for those debts, aren't they?
Yeah, that makes sense.
Right.
Sure.
So when the child passes, there's a good chance that the parents are still responsible because they signed off as the guardian, as the responsible party. So if there's ever a scenario for medical, whether it's not just for your children, but anyone you love or care about, and you actually signed off almost like a cosigner, right, as taking responsibility for the debt, it's still due. Okay. Yeah. Another example would be Medicare, right? Medicare may try to collect payments that they made while you were alive from your estate. Okay, but it's important to know there are rules limiting situations in which Medicare can collect from your estate. So if your loved one, if you're the heir, if your loved one incurred Medicare paid bills and you might have to deal with that as the executor in advance, what you want to do is do some research and bone up on what the rules are in your state for those types. So it doesn't bar Medicare for asking for the money, but you want to know where you stand and when you can say no.
Yeah, it certainly sounds like all of this deserves some education, and certainly this is a good reason for doing this particular podcast today because, I'm learning a lot, and I'm sure that everybody listening to it is also getting an education on this. How about credit card debt?
Yeah, credit card debt. That's another one. So credit card debt, companies can claim unpaid balances, right, or debt that you owe them. Claim it from your estate, just like we talked about with taxes and with medical bills, right? Mm-hmm. So they're going to ask for that money. So the executor of the estate, all that means is the executor of the estate, before they take the money that is left over and split it up between the beneficiaries or the heirs of the estate, mm-hmm. they've got to pay any bills first. Yeah. You can't pay the heirs first and then say, look, there's no money left. So whenever we talk about the debt is owed by the estate's got to settle up with everybody before they distribute the money to who the heirs are. So in this case, the credit card companies can go to the estate and usually do and say, look, you've got this money. If the debt's small, they'll often write it off. If there's not enough money in the estate, the credit card companies will, again, write it off. Credit card debt is known as, Ron, unsecured debt. Have you ever heard that term before? Yeah, most have. All that means is that's a debt where they don't have collateral. And we'll talk about other types of debt a little later that are secured debt. You have some collateral backing the debt up. Mm-hmm. Credit card debt is unsecured debt, which means there's nothing that they could take away from you if the debt wasn't paid. There's nothing to repossess like a car. Yeah. Right? If the debt's not paid, then the debt's not paid. So, if the debt is the result of a joint credit card, right? Or someone has co-signed on your credit card, the co-owner is responsible for the balance of the debt, even if the card was closed before your death.
So this seems like one type of debt that we would definitely want to be paying off and planning for, especially if you have a spouse or another co-owner on that particular credit card.
Yeah, and that's the key, right? If there's a spouse or a co-owner that the credit card company could come after, then if we're looking at prioritizing which debts to pay off, this would be one to make sure we take care of.
Absolutely.
If you're confident that the credit card company couldn't come after any of the heirs and there's no money in the estate, necessary to pay it off, then it's not as big of an issue.
Mm-hmm. Okay, well, that's certainly really interesting, and I really want to find out about some other types of debt that are out there. But let me remind everybody first, you're listening to the Retire Your Way podcast with Dave Lopez, ILG Financial. And again, if you would like to get in touch with Dave and talk about your particular situation and maybe get some further explanation on some of these things we're talking about, you can call this number, 540-720-5656. That is 540-720-5656. Now, if you're carrying a lot of credit card debt, tell us more about that, what you should do, how you should handle it. And also, if you don't mind, Dave, get into some other types of loans that we should be concerned about that may pass on to somebody else after we pass away.
Yeah, so just to wrap up the credit card, that's a good question. If you look at your situation and you think, hey, it's to my advantage or my heir's advantage to pay down this credit card debt, there's a lot of ways to do it, right? One way is you can start paying off the high credit card interest cards first, right? That'll help you pay it off sooner. There's a couple techniques to do that. You can transfer money to a new credit card that might have a no interest promotion to limit the interest while you're paying it down. Just be aware that you should always make sure, if you can, that you're conferring with your financial professional. Everyone's situation is different. So there isn't anything specifically what we're talking about today. There is no one size fits all. Have someone else look at it, your financial advisor, your financial professional, and they'll help you give some guidance in how to pay these down if that's something you want to do.
You just used one of my favorite phrases there. One size does not fit all. We always say that in relation to retirement plans in general. Everybody's situation is different. How about the folks out there who own businesses? What about small business loans?
Yeah, that's a great question. So small business loans, the rules for debt after passing really depend on the structure of your small business and if you're the sole owner or not. If you're the sole owner of your business, your estate may be responsible for the loans. So they're going to come after the estate. If you own a small business along with another person, then they may be responsible for the entirety of the loan. Think of it like what we talked about earlier with someone co-signing, right? Loans from the Small Business Association, the SBA, can be forgiven by having the person authorized to settle the estate fill out some paperwork and request for forgiveness. So if your loved one has a small business loan, you want to make sure you make them aware of the paperwork they'd need to get to try to have that forgiven.
Okay. All right. This is all really complicated, and I'm glad we're talking about all of this today because I'm sure you're helping a lot of folks out there. How about, this is one that everybody will be wondering about as well. How about mortgages? Can they be forgiven in any situation?
Yeah, they cannot. The debt on this cannot be dismissed. Remember a moment earlier when we were talking about unsecured debt for credit cards? Well, a mortgage is an example of what we call secured debt, isn't it? So when you take out a loan, it's secured by the property, which means the property is your collateral or your guarantee that you're going to pay the loan back. So the mortgage company or the bank, they're not going to, give up that property unless they get their money back. Yeah. Okay. So this debt will not be dismissed. When you pass, the mortgage on your house needs to be paid by your estate, right? Or if there's a cosigner on the mortgage, they're responsible, just like we've mentioned with other debt. If your estate, Ron, can't pay the total balance, then the executor of your estate is going to be forced to sell the house and use the proceeds to pay the mortgage back. And if they don't do it, just like while you're alive, the bank can just foreclose on the house and take it.
Sure.
Right.
Sure.
So when you pass, when you or your mortgage passes to your heir, your lender may request that the mortgage be paid off immediately. A lot of people don't know that. That's called there's what's called a due on sale clause, but basically it means, hey, if you die as the mortgage holder, we do not have to extend this 30-year mortgage to, your heirs. We can call it due at that time.
That doesn't seem right. I don't know.
Right. If your heirs want to take over the mortgage, right, the lender may allow it, but he may make them qualify for the debt. I will tell you that my guess is, for planning purposes, in the past, the banks weren't really big on following up on that. As long as the mortgage payments were being made, they really didn't care. But that's because interest rates were low, which means, imagine if you had bought a mortgage 10 years ago, you might have been paying, 7%. And new interest that they can get is like 1%. Right. So if somebody's paying the 7% mortgage, they don't care.
Yeah.
Things have now changed. We are now in a rising interest rate environment. So imagine that a bank has a loan, a 30-year loan at 2% interest, right? That's a great loan if you're a borrower, isn't it?
Sure. Absolutely.
Well, if you die and your heirs inherit the property, and now as of the recording of this, current mortgage rates are as high as 7%.
Yeah.
Well, they want to get that money back so that they can reloan it out at 7%.
Wow.
Right. So look for, as these interest rates start to go up, look for anybody who can call loans due based on the contract that was written, the mortgage agreement. They're going to start calling these things due if they can reloan the money out at 2 or 3 times the interest. So one of the things I think we will start to see in the next 5 years is the banks really being on top of when people sell a property or pass, that the banks immediately jump in and call these notes due.
Well, is there any kind of insurance that you can get to make sure your mortgage is paid off after you die?
Yeah, sure. Mortgage insurance is a great little policy. It's basically just a life insurance based on the value of the mortgage. So it kind of goes down over time as you pay the mortgage down. Right. And that's just a safety valve. If you don't want to have to worry or deal with this, and what happens when you die, the life insurance proceeds pay the mortgage off.
Okay, that makes sense.
Yeah, that's a great idea if this is a concern.
We're seeing a common theme here, Dave. Even though different types of debts have different rules and stipulations, it looks equally important to be trying to plan ahead for these things so you aren't putting your spouse or your family or your heirs or your business partners, you aren't putting any of those people in some kind of a tough financial position where they have to make some tough decisions and maybe, on the hook for a whole lot of money.
You're right. And you couldn't really have said it better. If you're leaving money or leaving your estate to people you care about, right? You don't want to put them in a bind in one of the worst times of their life when they're grieving for you.
Exactly.
Debt is no different than anything else in our financial lives, especially when it comes to retirement. You want to have all of this planned out ahead of time with your financial professionals, your CPA, your attorneys, if they're involved with wills and trusts. This is also a good depiction, Ron, of how there are a lot of moving parts that you may not even be aware of until it's too late. So, the purpose of all of our podcasts is to, we've talked about this I don't know what I don't know concept, right? Is getting ahead of this stuff. And today we're trying to get you ahead of, how debt could come back to be a nightmare for your heirs if we don't plan on it, what could be forgiven and what couldn't. So you want to get with someone that can let you know what you don't know.
Yeah, I would suggest calling Dave Lopez and having a conversation about all of this, which may take some time, but there's a lot of explaining to do, a lot of moving parts here to understand that you might not be aware of until it's too late. So get with Dave and Dave, tell us about some other types of debt that folks might have the need to be concerned about.
Yeah, just some housekeeping to keep a couple others that might normally show up with folks that we've met with. Most of the folks listening today may have heard of a HELOC. That's an acronym for Home Equity Line of Credit.
Sure.
A lot of times you'll pull some extra money out of your house, and it'll really be a second loan, won't it, where you're paying the money back?
Exactly.
Well, if a HELOC exists, Ron, but there is no debt, meaning you haven't taken any of the money out yet, you just signed up for it, then the credit line is just closed out and there's nothing due. And that happens more than you think. People will sign up and get qualified for a home equity line of credit so they can tap it in an emergency. Mm-hmm. And if the emergency never comes, you may have never tapped it. So you do have the loan outstanding, but there's no balance.
Yeah. Okay.
So if that happens, then the bank just closes it out. There's nothing to pay back. Be clear that a joint owner of a HELOC, like some of the other loans we talked about, may be required to prove that, that they can repay the money borrowed to keep the line of credit. Otherwise, they'll close the line of credit and call it due immediately, kind of like we talked about with the mortgage.
Yeah.
Right? Any debt owed through a HELOC will be claimed from your estate, right? And it is a mortgage on the property, just like your first mortgage, which means if you just ignore this, or if the estate can't pay it back, like your first mortgage, the HELOC is a secured note with the property. So they could foreclose on your property and take your house to get their money back.
So if there's the husband and wife involved in this situation and the husband dies, then the wife is responsible for the debt.
Yes, especially if she wants to stay in the house, right?
Yeah.
Or vice versa. If the wife dies, the husband's responsible. Just remember, the HELOC is a fancy term. It is just a mortgage, right? So the rules that apply to the mortgage apply to the HELOC. It's got to be paid back, or the owner or the lender can foreclose on the house. That brings us to also, we talked, that's houses, but a lot of people we meet with die and they have car loans, don't they?
Yeah, absolutely.
Yeah. So how does that work? Well, if you have an outstanding balance on your auto loan, a car loan, what would you say that was, Ron? Would you say that that's a secured or an unsecured debt?
I would say that would be a secured debt because they could repossess the car.
Exactly right. So just like a mortgage is secured by the property. Your car is secured. Your car debt is secured by the car, right? That's why you all see all these stories about car repos, right? Repossessions. So if you have an outstanding loan, you die, the debt's still due. If you can't pay the debt, if the estate can't pay the debt, then they're going to repossess the car, right? Yeah. So you want to make sure if you want to keep the car in the family, the estate's got to make sure that they pay that debt back off. Now, of course, that's the easiest way. If there's money in the estate, you just want to pay the note off and then you can sell the car. That's a lot easier than not paying it and going through the rigmarole of having them repossess it.
Yeah. So it's the same thing with a house. Let me ask you this. If you leave that car to someone, but you still have a loan on it, you haven't paid it completely off, could they force the recipient of that car to requalify to pay off the rest of the car?
Yeah, that's a great question. And you're right. It is the same as with a house. Remember, because this is a secured loan, right? Whether we're talking about the car loan or the mortgage, it doesn't matter if the will is giving the property to you as the heir.
Yeah.
The loan is still on that property, whether it's the car or whether it's the house. So you could go retitle the house in your name or retitle the car in your name once the will is probated because you're the new owner. But the debt is still on it. And now it's your debt, basically. And if you don't pay the debt, it won't affect your credit because you didn't qualify for it, right?
Yeah.
They'll just repossess the house or they'll repossess the car.
Yeah. So they wouldn't just let you keep, in some cases, I guess, if they wanted to really be strict about it, they wouldn't just let you keep making, your car payments,
They could. It's up to them. And I think that's what we talked about with the mortgages, right? If interest rates are going up and they think they can loan that money out for more interest, odds are they're not going to let you keep the loan. They're going to want you to pay up.
Okay,
if they don't want to bother repossessing the cars are different than houses, right? If houses go up in value, the bank may say, look, let's just get this money back. And if not, we'll take the house and resell it. Banks really don't want to repossess cars because they go down in value.
Yeah, sure.
Right. So there's a good chance that if you inherited a car from someone who passed, Ron, and it had a debt and you called them and said, hey, can I take over the debt? They'd probably let you take over the debt. They're hoping you'll just keep paying.
Okay. Yeah.
Right. They don't want to repossess the car. Now, if it was like some kind of a classic car, right? Or something like that, it was very valuable. It might be very different, but you're still responsible for the debt if you inherit it. Otherwise, if the estate can't pay for it, then you'll see the bank take the car back.
I just had another thought here. What about if someone passes away at, a relatively young age and they're paying child support? What happens to child support payments if that person dies and can't make them?
Boy, you caught me off guard with that one. That's a great insight, right? So if you have child support payments, they are not forgiven. Understand, not forgiven when you pass. Any remaining payments will be claimed from your estate. So if you have a partner or a spouse, some states may consider your partner responsible for continuing to make the child support payments, right?
Wow.
So you want to be aware of how your state in this podcast is heard in not just Virginia, but several states. So just be aware that that's something you want to look into. I mean, that could be specifically painful, right? If it's a second marriage.
Yeah.
And then you pass and then your second wife is notified that she's still got to make child support payments for children from your first marriage.
Yeah.
Right. So if you think your estate won't be able to pay child support obligations, a quick fix, and you touched on it with the mortgage, take out a life insurance policy. That'll be enough to lump sum money that can go to your estate that can lump sum pay for the child support. Estate planning here, Ron, it's crucial when you're supporting children and you need that support to continue in the event that you die early.
Does the same thing apply to spousal support? If you were, most people refer to this as alimony. Do you still have to, what happens when you pass away and you still owe alimony?
Yeah, that is different, right? Alimony does terminate when you pass away.
Okay.
However, there's always a however with me, isn't it?
It seems like it, yeah.
I wish, don't kill the messenger. I didn't write the rules. My job is just to bring them to you, Ron.
And you do a good job of explaining them too.
Yeah, so it generally will terminate when you pass. The however is, it depends on the state and it depends on exactly how the support agreement is signed, right? The spouse formerly receiving payments may claim the remaining amount due from your estate, or through any life insurance that you have, regardless of who the heir is. So it's very specific to how the support agreement is signed.
Wow. I guess everybody ought to look into that if they find themselves
in fact, a lot of times now when people go through those and they, the lawyers, they lawyer up and they sign these spousal support agreements, it's not uncommon that there's a clause in there that requires the person who's paying support, that could be a husband or wife, right? But the person paying support is often part of the agreement is that they do take out insurance.
Yeah.
And the policy goes for a certain amount that would be the balance of the support that's paid to the person receiving support. And that just guarantees it and it takes any new spouses out of the equation.
Okay, that makes sense, I guess. So as always, the shining point we see in all of these examples is that planning is absolutely necessary. We talk about that all the time on the Retire Your Way podcast. It's necessary to have a plan. What else should we be walking away from today's episode with, Dave?
Yeah, boy, you said it good. You can actually do these as better than me now, right? Planning. We could keep this podcast to 4 seconds if we just said, what are we going to talk about today? And I would just say that, and we'd sign off, wouldn't we?
That's a good 4-letter word, plan.
Yeah, so today, the bottom line is this. The only debt that truly vanishes when you pass away is federal student loans. It's the only one. All other debt may be required to be repaid by a co-owner, a co-signer, a spouse, an heir, or an estate. Right? If it's important to you, especially as you move into or through retirement, if it's important to you to lessen the impact of your debt on your spouse, lessen the debt on your heir, your children, your estate, whoever it may be, if that's important to you, Ron, consult your financial planner or your financial professional. Determine which debt you want to pay down first or how you want to structure the debt so that they don't have a nightmare on their hands.
Yeah.
Right? And work with them together to, in advance, decide how we're going to structure all this so that we can minimize the impact on your heirs of any outstanding debt. Your goal should be, I'll say it again, to minimize the negative effect of any unresolved debt on your loved ones. It can be done, Ron, but you need to build a plan, and then you need to follow through and execute the plan, and we can help you with that.
Dave, thank you so much for this conversation. I feel as if I know a lot more now than I did when we started, and I think that's probably true for everybody listening.
Yeah, I appreciate it. This is a great one to just keep on reserve and use it. When you're ready to go through this planning, go back and listen with a note sheet and use it as a checklist. So you can list the different types of debt that you want to address, and you can take it to us or your financial professional, and we can kind of go through them together with you. Well,
we've been talking specifically about debts, whether they can be forgiven or not, and most of the time they are not. And Dave Lopez, of course, is the guy that you need to talk to if you want to get a longer conversation about all of this as it applies to your specific situation. Income, legacy, growth, it's all right here at ILG Financial, and it's about helping you plan for retirement your way so you can achieve your financial goals. Call ILG Financial today at 540-720-5656, or you can go online to ilgfinancial.com to learn more. This has been the Retire Your Way podcast with Dave Lopez. I'm Ron Stutz. Thanks for listening. The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and do not necessarily represent the views of the Alpha Star Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Alpha Star Capital Management, LLC, a registered investment advisor. Alpha Star and ILG Financial, LLC are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.